Welcome to Tuesdays with Gary. I'm Gary Lanham. I'm the team leader of the Gary Lanham Group at Coldwell Banker Fort Lauderdale Beach office. And today we're going to continue to talk about doing real estate with COVID-19 in our presence. And we're going to talk about some particular things with regards to mortgage and loan programs. And I've got with me my special friend and guest, Donn Rubin, who is with Fairway Mortgage. And we're going to share some information together about doing mortgages during COVID. We're going to talk about that all-important topic of forbearance and what that means in today's market, because we know that that goes away effective July 1. So without further ado, I would like to introduce Donn Rubin, Fairway Mortgage. Welcome, Donn.
Hi, Gary. It's so good to be with you today. Thank you.
Thanks for joining us. So how are you doing? Are you hanging in there with COVID? Are you staying safe? Are you at the office?
We sure are. A lot of the staff is still working from home, but these days with technology, that's possible. And we are just overwhelmed with business due to refinances and due to all the extra threading the needle during COVID-19, which I know we're going to talk about a little today. So very
yes, we
busy.
are. And so you feel like you're coming into phase 2 and you're not working from home anymore. You're now at the office. Could you tell us a little bit where your location is, Donn?
We are in beautiful downtown Fort Lauderdale, right between the Art Museum and the Public Library at Andrews and Las Olas.
Wonderful. And Donn, if you could give us a little background on you as a mortgage broker and a little bit about Fairway before we get started, if you don't mind.
Okay, well, of course, it's hard to believe, but I have been doing this 41 years, and I've never seen anything like what we've been through this year. And Fairway has 7,500 employees. We are number 2 in the country, and a wonderful, caring, core value organization. And I am very thrilled during this pandemic and everything that's going on to be involved with a company such as Fairway.
Fantastic. So Donn, you've been through the ringer. You've been through up markets. You've been through down markets. You and I have been doing business for about 15 years together. And we talked probably a couple of months ago now about the new credit limitations and how underwriting criteria have changed with regards to COVID. And I want to use this time today to continue to educate my customers, my prospects, my clients who have mortgages who may need to refinance, and my customers who are looking to buy either existing homes or new development homes. So are you ready to go?
I'm ready.
Let's go. So Donn, give me some updates as far as what's going on the credit side with regards to the changes since COVID, and have you seen additional changes from the last time we talked about 2 months ago to today?
Yes, absolutely. Yes to both. The biggest changes have to do with the possibility of not being employed or being furloughed temporarily, and also forbearance, what the person did, what type of forbearance, who owns your loan. That's very, very important for refinance. For purchase, FHA had laid some pretty heavy guidelines the last time we spoke. They have eased off on that. The credit score can still be a little lower. The debt to income can be higher. So FHA has come back as a very viable source for all homeowners, but especially first-time homeowners. VA is still good. And then, of course, we have our conventional Fannie and Freddie. No, there's no one-size-fits-all. So it's very important to have a borrower's information and advise them to the best option possible.
So great. So we learned the last time you were here, and you were you dropped so much knowledge on us as far as the changes in credit scores and the limits from Fannie Mae, from Freddie Mac, from FHA. Have there been any changes, additional changes as far as being credit worthy to be able to get a loan, Donn?
Well, what's interesting, since we last spoke, jumbo mortgages are back. They're a very special market, and they're back. Not as many investors as last time, because some didn't make it and some haven't come back yet, but they're back. And as far as credit scores, it's always important, except for FHA and VA. Most rates are credit score driven. If you have mortgage insurance, it's credit score driven. In the private sector world, almost anything you buy is credit score driven. So credit scores are still important, but we're almost back to where we were. Just some extra guidelines, especially with self-employed borrowers, to make sure because they're up and back open in some way doing business. So a lot more checking day before verification of your job, the morning of, or in our case, the day before, because our wires always get there the day before. But I'm happy to say with people looking for a home, our TBD program, to be determined, if we run that all through underwriting, when that person has a contract, we can guarantee a 15-day closing. And that, as you know, as a top realtor, that's so important.
So I know that when we first started lockdown with COVID, you were pushing your dates from 15 back to 30, which is kind of normal, 30 to 45 days. The contract normally specifies 30 days. So you're telling me now that we can go back to that 15-day close?
If we do a TBD, upfront underwriting, absolutely.
Okay.
Without that,
Okay.
we're right around 21. And I am hearing through the grapevine and loans I'm getting that some of the major banks are out to 4 months.
4 months. Well, there's a lot of waiting room in that lobby there for sure, right? I had a customer of mine tell.
Have you written any contracts for 4-month closings?
I'm not interested in a 4 month closing, Don, and you know that. I've received them from inexperienced buyers agents.
Wow.
So let's continue on and let's talk about forbearance, because we know that that was when the economy was, in March, let's face it, the stock market lost 30%. I had over $2 million worth of deals hit the dust. And we all of a sudden, the president called for forbearance on our mortgage loans. And some banks, in fact, got in lockstep with that, and we're giving up to 3 months of forbearance. If my calendar is correct, that forbearance period ends at the end of June, and July, that borrower will be expected to make a payment. Is my calendar correct?
Your calendar is correct. And unfortunately, this has been so misunderstood and really being remedied on the fly that there's no one definitive answer. The first thing to know is the person's loan, is it owned by Fannie or Freddie? That determines who underwrote it. And is it being serviced by them or is it being serviced by a bank? That will determine what has to happen. But as we are now, if a credit report shows forbearance, and that has happened just from someone merely asking a question about it, it's been a 3-month forbearance. On the 4th month, that has to be brought up current and the forbearance removed from the credit report. If it's not Fannie or Freddie, some banks have put it on the end of the mortgage. So on the 4th month, that doesn't have to be brought up to current, but it has to be refinanced or paid off the entire amount. Does that make sense, Gary?
That makes a lot of sense to me, but I wonder how many people that have gone into forbearance understand that implication as far as bringing your loan up to date, plus payment of the 4th month on the 4th month. Similarly, I wonder how many people who have been in forbearance understand the rate and the penalty dollars that are associated with taking the remainder of those first 3 months on the back end of a loan. Could you talk about that, Don?
Yeah, I did like a scenario, a $250,000 loan at 4%. If you took forbearance 3 months and put it on the end of the loan and didn't sell your house for 10 years, that forbearance costs you $6,750. And that's at a $250,000 loan amount. So it changes amortization. So depending on when you eventually sell your home, this forbearance can be quite costly. And you're right, as we get loans into refinance, it's a case-by-case study if they took forbearance, because many people didn't even know they took it. And it has to be removed from the credit report and then brought current. As we approach the end of June, we're going to start to see how many put them on the back end. And we'll have to deal with that. And the guideline could change once again. So it's a moving target.
Well, it's certainly a target we should all keep an eye out on, because things are changing and they're changing rapidly. Coldwell Banker is the #1 broker in Broward County, continues to educate us about what's going on in the market as well. And just today, we were learning about looking up Liz Pendon properties, looking up where mortgage holders were late on their payments, because we anticipate that people may not pay attention to the dates that their forbearance started and when their next payment is due. Do you have any insights onto that, Don?
Well, if history repeats itself, that was very prevalent in 2009. People just put it out of their head. They didn't have automatic payment or didn't reset it back up and had 30-day late. At the very least, if that were to happen now and you have a 30-day late, that freezes you from really doing anything for 12 months, because Fannie and Freddie guidelines are you must have a 12-month history of no 30-day lates. So it's a shame, but it can mess someone up for a period of time. I know, and you have too. I've warned people that if they truly did not need forbearance, do not do it.
Yeah, so I had a lot of customers call me, and they saw it as an opportunity for savings, free money, right? And I asked the simple question, can you make the payment? Can you make the next 3 months payments if you lose your job? Because my belief, to prevent any type of short sale foreclosure activity in the future, it's easier to stay current and try to go on with your life as opposed to catch up, because we saw too many people being downsized in their jobs. We saw too many people who lost their jobs. And right now, I think we're sitting at 40 million people without jobs. And yet, counterintuitively, our real estate market is robust.
I think we all know somebody who's lost their job either permanently or temporarily. It's widespread. None of us have ever seen this before, unless we lived through the Depression. It's widespread, and it's going to be a long comeback. But you still do have people, for whatever reason, flocking to Florida, leaving states like New York, New Jersey, for various reasons. So we see big activity.
We had the normal reasons when we would get those high state income tax states like New York or Connecticut or New Jersey, of the people coming down here. And now layer on top of that the COVID issue, right? The pandemic in places like New York City, where it's so congested, it's so hard to get away from people, and it's so likely to become infected yourself. So I think you're right. I think we're going to get a lot of those people continuing to move, and continuing to move not only because of the state income tax, in other words, Florida having no state income tax requirement, as well as for looking for safety for more wide open spaces, of course, the ocean, and the constant breeze we get down here.
Gary, do you see Juan Cabrera's question here?
I do. How do buyers that applied for PPP, unemployment, or any other financial aid get affected by this action at the time of buying and getting finance? You covered a little bit of that. Would you like to go over that again?
Yeah, Juan, that's a very good question. And the answer is different whether you're self-employed or W-2 employee. If you're self-employed and you received a small business loan or whatever kind of loan, depending on what it was, usually there's no payment. It's free and it's not counted. It has to be explained. But in the case of maybe sometimes a payroll loan, a PPE that is payable starting in 12 months, that paperwork and that payment must be figured in to their liability. And it's funny you asked that. I'm doing 3 loans right now, business owners that have received assistance of both kinds. As far as an employee is concerned, I doubt that just on unemployment they can qualify for a loan, but that certainly counts if there's a gap of employment and there's a restart date. So that's a very good question, Juan. Thank you.
Thank you, Juan. So, we look at the number of 40 million people being unemployed, and we still see the robust nature of the real estate market. And as of today, I believe, if I got my statistics correct on CNBC, the stock market has practically regained all the losses that occurred, that 30% loss that occurred in March. So somebody's making money. Somebody has a crystal ball that suggests that the future is not as bleak as we thought it might be. And I think it's people who've learned, like you and I are doing right now, how to do business at home, how to not rely on the corporate tit, to make our money, and instead have gone out on our own in self-employment to make a good living. Is that your experience as well, Don, when you get these applications?
Oh, I do. Everything's changed forever. I don't think you're going to see business travel the way it used to be. Zoom meetings seem to be a way of the future. And we were a little bit early on this in that a lot of our processors liked working from home. They were more productive, they saved time, and they split it up. Well, this certainly cemented it for a lot of people. I don't think we're going to see office setups like we're used to seeing them. I think it's a good thing. It's a good
I think
thing.
it's a really good thing. I think what it's really done, and some people are starting to talk about it, is what that's going to do to the commercial real estate market. What that's going to do to, if you look at New York City, where Visa had 22,000 employees in office spaces in Manhattan, and now through the end of December, Visa has said stay at home and work. That's going to be repeated through every city in the country. And the commercial real estate business, in my opinion, I'm not a commercial realtor, is going to have to reinvent itself, rethink more like residential experts, maybe convert that space because of some housing shortages in many areas of the country to be like loft spaces or different kinds of alternative living spaces.
And I think you're going to see builders starting to build models that take into account home offices.
Well, we're seeing that a lot. In fact, there are a couple of projects in Fort Lauderdale now that really push that work, live, home space environment, and push the fact that you have a separate entrance. You don't have to get in the hallway. You don't have to get on an elevator with anybody else. That you have total privacy in your home. Some of these places, there's one project in particular, Urban Village, which is located in Oakland Park. And by the way, I'll have the developer on this show next week to talk about Urban Village. But in some of the units there are actually two doors, a separate entrance to the office space and a separate entrance to the residential space. If you haven't been there yet, I'm going to take some customers by there this week. Maybe you'd like to join us.
Yeah, that's really forward thinking. They were ahead of their time.
Well, it's funny, because I'm learning more about the backstory there, and apparently the developer has done this kind of project. He's from Colombia, and he's done this kind of project in Cartagena, and I think his experience there has allowed him to really modify the project. And they're not cookie cutter, like it's not every unit is the same. The developer is really sharp and keen and understands that we got to attract all age buyers. It's not just the millennials, but it's also the Gen X, Gen Ys, and the baby boomers. And if I recall, in looking at the demographics for that project, it's kind of a split. Half the people that own there now are under 50, and half the people that own there are over 50. And another thing I noticed about the demographics, because I'm looking into that project for a couple of my buyers right now, there, one getting ready to close, is that there's a large Hispanic community there, and there's a large Gringo community there. So it's really kind of a model example of urban style living in Fort Lauderdale. Something that you would expect to see in New York City is actually here in Oakland Park. I mean, that's pretty incredible to me.
Yeah, I would love to see that.
So, when I had Lanham and Associates, I was living in the corals of Oakland Park, and I was very involved with my homeowners association. And I strategically put my office on Northeast 12th Avenue, right by word of mouth. You remember that little catering takeout place?
Of course.
Ellen
were a
Cirillo,
pioneer.
She was a pioneer. She was a pioneer in terms of doing gourmet food takeout. We set ourselves right beside Ellen's spot, and we got involved with the city of Oakland Park. We helped develop 12th Avenue and Dixie Highway to become a part of what is now known as the Culinary Arts District. Oakland Park is on the move, baby.
Yeah. Okay.
So Don, as we go forward now, we talked about projects like Urban Village. And by the way, Urban Village has some units that are constructed, and they're also going to be selling some pre-construction units. And I noticed in Wilton Manors and also other areas of Fort Lauderdale that pre-construction is really not a bad way to go these days. Can you talk about the buyer that's interested in pre-construction and the differences as far as buying pre-construction, getting the discount, and waiting for the unit to be delivered?
Okay, well, there is a challenge with when you buy pre-construction, it depends on what you have to do on your side. Do you have a property you have to sell, or are you renting? So that's one decision. For buying pre-construction absolutely offers you the opportunity to customize the specific unit you're taking. So there's an advantage there. And usually the developer has an end date. And when you're dealing with pre-construction, it's very important that a lender be able to convert that the minute the CO arrives, to convert that and turn that around into an instant closing, because the borrower is depending on that and the developer. So there's a lot of advantages with pre-construction, I think.
Yeah, I like the fact that you can live in something that for the first 10 years you practically have nothing to worry about. I mean, I bought a house, I'm in a duplex, and my place was built in the 1960s. I've already replaced my cast iron pipes. I've had other plumbing issues as a result of the age of the house. I've had roofing issues. You name it, I've had it. I love my house. I'm not moving. They'll move me out of here with a hearse. But nonetheless, buying into an older home, you have some different types of disadvantages in living here, because oftentimes it's like a money pit.
Exactly. Like we're all having stories about the drain pipes, and that's an expensive fix. And you can't see it when you're doing an inspection or anything. So that is a concern. You're right. Just like a brand new car, pre-construction, you're the first person in it. It's brand new. It's under warranty. Yeah, it's peace of mind.
Peace of mind. So Don, I really appreciate the updates on the mortgage side of the business today. I really appreciate learning about this forbearance, because I think that's really the one thing we have to hammer home to our customers who already own properties, right? And if you wouldn't mind going over the criteria, if you're not in forbearance and you want to refinance, what should my homeowners be looking at in terms of their current finance rate and the necessity or need to take a look at least doing a refinance?
Okay, thank you for asking that. Anyone with an interest rate of 3.75 or higher, we should definitely have a conversation. Rates are at record lows, and from 3.75 or higher, there is big room for improvement. Now, of course, depending on your personal story, your goals, your desires would dictate whether it makes sense for you to refinance, into which product, rate and term, pull money out, because literally these rates are like free money. So there's a lot to consider, and each person, their goals are different. But keep in mind, if you're above 3.75, you can improve your situation, Gary.
And improving your situation, like, it's funny because I have a 4.0 mortgage, right? And I think I'm so lucky. I mean, the first place I bought in my life had a 12% mortgage, and I was grateful that I got it. And now I have a 4% mortgage, and I think it's like free money compared to that. And now you're telling me that I could actually save additional money on a refinance, and it's something that you and I will certainly be talking about.
You better call me.
Oh, of course I'll call you. Before I let you go,
4%.
so before I let you go today, I want to talk about one other thing that we continue to talk about with regards to people who are looking forward to retirement, and the concept reverse mortgage has had a bad rap in the past, and they are kind of circling back with a different reputation, and they're circling back as a tool for people that own these properties to actually purchase additional properties. They can actually accrue income, have investments, and make money. Would you mind talking a little bit about that, Don?
Gary, I can't tell you how pleased I am that you brought this up, because I am passionate about reverse mortgages. Unlike most people think it is the loan of last resort, it is that, but it is also the most powerful retirement tool for people heading towards retirement age. And for you and your market, realtors, purchasers, using a reverse mortgage for purchase literally means you can buy double the house that you were going to pay cash for. never have a mortgage payment, only responsible for taxes, insurance, and general maintenance. So for older people in retirement who wanted to downsize, move closer to the kids and the grandkids, well, if they'd been in their home 50 years, 40 years, downsizing could mean it's more money. So the home they wanted to pay $300,000 cash for, the home they really want costs $600,000. Well, guess what? They can have the $600,000 house for their $300,000, never have a mortgage payment, and their retirement savings will last longer. So anyone approaching 62 or older, whether they're looking to purchase or refinance, they have 50% equity for refinance. Absolutely, I beg you to call me so I may enlighten you and show you the power of a reverse mortgage.
I think a lot of people don't understand reverse mortgages, and I think that that's due to that, as you suggested, it was the loan of last resort. It was typically for people that had very low Social Security checks and no other retirement means, and they figured they were going to stay in their house until they died. If somebody today does a reverse mortgage, and let's say they have heirs, can an heir inherit the house if there is a reverse mortgage in place?
Absolutely. There will always be equity in that house because they're not loaning you 100% of the value, and the home appreciates. So the heir, after the loan is paid off, will inherit the balance, or also has an option to purchase the property at a 5% discount, and they can take 1 year to decide.
So so let's talk about that discount. So the bank determines the discount, is that correct?
The appraised value.
They took the appraised value, and then they take a 95% value, and then the heir can buy it 95%.
Right.
That's a no-brainer. That's a no-brainer.
Most heirs don't want the home. 99% of children.
Well, they're living in New York, right?
They want the money. But it's not only what happens when you move or pass on, but it's what happens when you tap into your equity, what you can do with that tax-free income. Or in the case of a purchase, only need half the money to purchase it and never have a mortgage payment. It's all about making your money go further while there's less income than when you were younger and working.
So that's great news. So much knowledge you have, Donn. I really appreciate you dropping that on us today. So, again, we've talked about a lot of stuff today. This is a guy that has over 40 years experience in the mortgage business, and he looks so young still, right? I really appreciate you being with us today, Donn. Do you have any further comments you'd like to add before we start to close down the program?
Well, it's always a treat to be with you. You are an utmost professional in my mind, and I'm always pleased to have your ear and be on your show. And I urge your viewers, if they have any questions, even if they're working with someone else, ask me. I'd like to just give you the information. It doesn't matter if you're working with me. That's how we roll, right, Gary?
That's how we roll, because we're professionals, and we believe in service to our customers. We give, and eventually we know we give to enough people that it all comes back to us. Donn Rubin, thank you so much for being with us today. Before we shut down, I want to remind you that we're going to have the developer on our show next week, Tuesdays with Gary, and that will be the 15th of June at 1:45, and we'll be talking about the project Urban Village. And you'll hear more about Urban Village as we go on, but I'm so excited. And Donn, I want to take you there and show you that project. We have a mutual customer that I had basically I had coffee with today, and you know who I'm talking about. And he had circled back to me, and you'll love this because he contacted me about a listing I've got. It's a 3-year waiting period before you can put a tenant, and it's actually a great building. It's at a great price, but you can't rent it for 3 years, right? So he sent me information about that. I was able to turn it around to a former team member that I had in a nice building at Port Royale, and we'll probably be able to sell that unit. Good karma goes a long way, Donn, in every single way, and it's every single aspect of our lives. So, but what it made me realize is that not only are homeowners driven by life events, but this customer who has bought and sold through you and me several properties, he's still buying. He's still buying, and he's still looking to rent. He's got college age kids. In fact, one of his children is married. He's trying to build an estate and a retirement plan that like no other, so he can travel. Donn, again, thank you for being with me. Shitachi, of course, is in the background. I want to make sure I give you credit. You do such a great job for us, and we really appreciate you. Please join us again next week, Tuesday, the 16th of March, excuse me, 16th of June. And we'll be having the developer from Urban Village on with us. And until then, I want to wish you adieu and have a great week. Thank you, Donn.
Bye-bye. Thank you.